In this recap video for Simpler Futures, gang, we're going to talk about a concept that we spent a good part of, I'd say, the first 90 minutes of the day in the chat room discussing, and that is the idea of one thing leads to another in terms of short and longer term time frame setups. We had something fairly unique. We haven't dealt with it really, whereby we have two very different trends that we inherited in the morning. And that was kind of a 60-minute overall uptrend, while we had quite a bit of bearishness to kick off the morning. So take a look at what we were dealing with, 7:30, 8:30, before the bell rang. That's the line in the sand. But before the bell rang, what kind of market do we deal with? So it was very much a dots and red grab kind of downtrend, while on the other side of the 60, we saw the overall uptrend. And what we call this in terms of one thing leads to another is a setup whereby this weakness actually feeds a longer term, in this case, a 60-minute overall buy. So let me show you what that looks like. So as the 5 trickled lower and lower and lower, we knew we had not the Darvis at that point. That Darvis really didn't print until noon. But what we did know we had was a 34 EMA on the high. And every hour, this 34 EMA high plots at a different level. So here was a 34 here, here, until finally we caught up here, and here. So that 34 was in place. We're watching that. And then you've got the Darvis just below. Now, if I'm being a little bit more conservative and I definitely like to play more conservatively, I'd rather get an 83 3/4 entry, but I may not get that. That may be incredibly unrealistic for the level, for the price to fall to that level, but it's still there nonetheless. I don't want to be any more aggressive than the 34 EMA on the high when I lose dots. Let me show you another setup here. And this is the YM. And it's a completely different look. So the YM was incredibly bearish. And if I wanted to take advantage of a buy, certainly the 60-minute was one we could have watched. And as the market sank and sank and sank, this transitioned from what was a trend following buy, which, by the way, when you watched the morning and you saw the way in which the Dow, S&P, and NASDAQ were reacting, it didn't take long to realize that from relative performance standpoint, the Dow was the weaker and the NAS was the stronger, and then ES ends up in the tug of war between the two. But nonetheless, this Dow then sold off to what I think is an oversold support level. We could use any kind of oscillator down in here, like a ready aim fire or a slow stochastic, to confirm when this market could indeed move up. But this is a completely different look at the market trend. NASDAQ and S&P, arguably are much, much more bullish than the Dow. The Dow is still a buy. We respect the trend that was, but the NAS definitely is the strongest of them. And you can see here, it bounced off the 21 EMA. Now, at the time, the 21 EMA would have been an aggressive and allowable entry because we have all the dots that preceded, plenty of green, 5 dots at a minimum that preceded this candle right here. And that level would have been, as you can see here, the 41, the 71.41 level. So this is what we're looking at here in terms of potential follow through on the NASDAQ. This market closed in a very lethargic manner. And when I look at the response we're seeing even after the market reopened, I'm recording this right now at 4:35 Eastern. It's still pretty range bound. But again, I'm going to trust a few things. One, the overall 60-minute time frame, and then I'll look for some follow through. I would love to see some follow through up to about 71.80. That would be fantastic to see some follow through up to 71.80, and then see if this market wants to punch up to significant new highs again. I mean, the NASDAQ is the strongest of these. It will likely pull the S&P with it. But what I want you to think about is when you start off your day, what is your bias? And if you're looking at a day where you're seeing the 5 and the 60 moving in opposite directions with clarity, not 5 choppy and 16 clear or 60 choppy and 5 clear, but they're going in opposite directions with clarity of their own, that's a quick heads up that you've got a mixed up market, and definitely a good heads up to lower your position size and make your entries a bit more conservative.